What's up, everybody? Welcome back to the Dollars and Dumbbells podcast. I'm your host, Justin Green, certified financial planner. Today, I'm excited to have a conversation with Nick Krop, CPA and partner at Cornerstone Accounting. He's one of the top CPAs that I actually send clients over to who have an online business. He's also recognized on social media, Instagram and TikTok, as well as YouTube, for debunking a lot of really bad tax advice. Welcome to the show, Nick.
Yeah, thanks for having me, Justin.
Absolutely. Let's start off. Let everyone know, where are you calling in from?
So I'm located out in Frederick, Maryland, which is hour from Baltimore, hour from DC area.
Cool. Very cool. I'm gonna like dive straight in and just be like, what's the worst tax advice you've seen on social media?
It's so myriad. There's so many bad things. Obviously, I think the one that keeps on coming back, the gift that never stops giving, is people's misunderstanding of Section 179 depreciation. Generally speaking, I think that is one that is it's constantly bad advice, especially in relation to vehicles. Easily the worst advice I see is based on I can write off this entire vehicle this year based on these factors. I I can't keep responding to videos about this because it makes me a little dead inside. That's, the point hasn't gotten across to this point, but that probably is the most rampant thing I see. The newest thing, though, is now everyone talking about Augusta rule and things like that. So there's always a new one that kind of crops up, and I think the Augusta rule is starting to overtake Section 179, especially because people are
Mhm.
going to have to eventually realize that bonus appreciation, the thing they're actually taking on their vehicles, is going away. It's starting this year, going away, and so they're going to get to tax time and realize, oh gosh, I guess I couldn't take this the whole time. So I think Augusta rule is our new Section 179 at this point.
Interesting. Yeah, it's kind of hard to justify the really expensive luxury car purchase for an online business owner who doesn't need a car in the business.
Yeah. Yeah, one of the things people don't really understand too is they're just like, well, I'm a business owner, so now I get this. Where like somebody tips are like, now you can write off your vehicle, you can do this and that. Why? Uh,
Just
If
start an
you're not using
LLC and
it,
now you can do everything.
yeah, the magic of LLCs, man.
Absolutely. The Augusta rule, it's funny because they all have some legitimacy behind it, right? We joke around with it, but there's legitimacy behind almost all the strategies that you will hear online, whether it's, Section 179, the depreciation, the cars, the Augusta rule, which is named after the golf tournament. They all have legitimate strategies behind them, but they just lack so much context in the videos online, and it just doesn't apply to a vast majority of business owners.
Yeah. It's funny. I was actually talking to a guy yesterday who's looking to kind of get into the space about offering tax advice and tips, things like that. And he was like, I have a myriad of ideas and I'm looking to get them up, but I want to make sure that I'm doing them correctly. So that way I provide, good information. And, the hardest thing is providing one on social media. You need to have a really good hook. You need to have a good structure for your videos. You need to draw people in, keep them entertained, and give them facts without boring them. But if you want to get away from being just a clickbait video, from being a video without context, it requires that extra 5 seconds where you're going to lose someone to make sure you're getting correct information, to make sure you're getting actual good advice out there. And I've kind of stuck with that the entire time. So like there are so many videos I could do really clickbaity. Absolutely. There are ways I could
Mhm.
give half truths or not necessarily half truths, but half the context for the thing to make it sound super good. But I don't know, just personally, morally, I can't. And unless I'm giving the full context for it, I feel like I'm being disingenuous about something. And so to the detriment of my account per se, I don't. And I go a little bit longer in my explanation. I go a little bit longer with my video to make sure that I'm precise in my words, to make sure I'm giving the full context. And I told this guy, I was like, for the sake of virality, you'll probably, if you want to be really factual, you have to give that extra 5 seconds, and you're not going to have it blow up necessarily. Not all of them. I mean, personally, I've had a number of videos that I went really long on, and they did pretty well on TikTok and things like that. It's just rarer. compared to these other guys where there are some people that will like follow me and they will start posting their own like kind of tax hacky type videos and they're not terrible. And they'll start off with like 5,000, 6,000, and they're growing. And I'm at 80,000. That's great. And they'll surpass me within like 3 months. And I'm just like, I can't compete. I can't compete with the voluminous videos you're putting out there because I have to make sure that I'm getting as many facts as I can. And maybe that's to my own detriment, but I feel like I've created at least a following of people that trust the things I'm saying. That it makes me feel better at night, based on the videos that I'm putting out there.
It might be a detriment to your follower count, but at the end of the day, I bet you it's a plus to your business, right? Because at the end of the day, we're putting out content to build businesses, right? You're a CPA,
Hmm.
I'm a CFP. We're both in the finance industry. If you're not a finance person, it's probably a pretty freaking boring content, to watch.
Hmm.
I think we can admit that, right? I mean, you're doing a lot of good things and you're making it fun, but most CPAs don't even get on camera. But to
Right.
make it fun might get you more followers, like to make it fun and like a catchy headline that's not completely factual. Like, here's an example. I saw a tax person did a video recently and it was like how to write off your child support. And then in the
Yeah.
comments buried was like, technically, it's like paying your kids through a business, but you need to get your ex-wife to agree and etc. And it was like, okay, so like, it's just this like, yeah, technically you're writing off your child support, but it's just like a long, like crazy strategy that will probably never get applied, right? And so you can
Right.
go with those crazy headlines, those flashy ones that'll get you followers, etc. But I actually think those would probably be a detriment to building your business because people would see that and then they'd reach out to you about it. And then you'd be like, 99% of the time, you'd be like, yeah, it doesn't apply to you. And I'm like,
Hmm.
okay, like, well, so, and on that note, I'm actually curious, like, how has the social media success? Because when I found you, I didn't find you on TikTok, so I don't know how many followers you had over there, but you didn't have nearly the amount of followers that you have now on Instagram. Like, I think you were probably
Hmm.
like 1,000, 2,000, if that. You were still posting videos in a cutoff, which I think you should bring that back. That's just my personal opinion. But now you're like 20K plus over on Instagram. So I know you're doing really well with your content, but I'm curious, how is that translated like to actual business?
The most amazing thing to me was just to give a little bit of context. I started the TikTok 2020-ish, maybe a little before that. So I started the TikTok then, and my dad is one of my business partners. We have another business partner as well, but he's been a CPA for a long time. I've learned a lot from him. He's a serial entrepreneur as well. We just do business, right? So I enjoy things. I
Mhm.
enjoy working with him, and he's a great just fount of information. But I told him I was like, "Hey, I wanna do TikTok because I can do these kind of like off the cuff kind of videos. It works for what I'm willing to do, and just so I can have something for my sphere of influence, right? Just so I can have something to post on maybe Facebook or something like that. Just content's good." He's like, "All right, that's fine. You're probably not gonna get any clients from it." And actually, I started posting even with like 1,000 followers on TikTok. I got a client or two, and I was like, "Huh, well, there's something here." And then I really started to press into it in like July of 2020. That's when I posted every day. I was really, really, or it's 2021. I just was posting every day. I was like, I'm gonna get up to 10,000. I'm gonna get up to whatever it might be. And in 2022, I probably had well over 200 appointments just coming from TikTok. And 2023, I mean, it just continues. Obviously, the more it's just kind of out there. Then
Yeah.
there's referrals and things like that as well. But just it was crazy the influx of people that I got from TikTok, which doesn't seem like it would be a source of all these people, but it is. People crave information. They crave someone that they trust and that can give them information in a way that they understand, and that I was able to provide for them. So I was kind of blown away by that. Instagram, I got actually quite lucky. So on Instagram, I only had like 500 followers until 2 months ago, something like that, because I posted a
Oh, okay.
video of me and I don't know if you saw that me and Disney video where, it's an accountant in
Oh,
Disney.
yeah, that went viral. Yeah,
Yeah, that
yeah,
one
yeah.
that one has 21 million views on Instagram, and it has about another
Damn,
4.4 million on TikTok. So it blew up my account. And
damn.
thankfully, because I'm always worried about TikTok getting shut down. So I was starting to post more on
Sure.
Instagram, and I was like, great. Now I have a good standing on Instagram, and now I'm focusing on YouTube because that's really the next bastion of getting really sticky followers. So, and you are correct. So I'm sorry. Just one other point that you made. It is true. I'd prefer to put out the videos and get the clients that I'm getting based on the content I put out, because those are people that want to work with me that I would want to work with as well, because they're not coming for the clickbaity
Right.
stuff. They're not coming for the tricks and all this kind of stuff. They're coming for good factual information, and we can find ways to work things in the tax code. Obviously, I want to save people money on taxes. Don't get me wrong. That's why I'm doing this.
Mhm.
But like, in an actual legal way, in an actual like smart way. And that's the kind of clients I get, is people that are looking for that smart way of doing it, not for the, Grant Cardone following type of people. Nothing against Grant Cardone, but also a little bit against Grant Cardone. So,
Yeah, it's tough. Some of those really, really big time influencers, like they can give out, like Grant's got great motivational stuff. Alex Hormozzi's got great business, leads and
mhm.
offers, great advice on
Yeah.
that. But a lot of them put out tax info that has no business being put out there. You know what I mean? Like it just has absolutely no business. Like Hormozzi's had a couple along the lines of like, the LLC just start an LLC. And I actually
hmm
looked and I went back and I was referencing that one time and I looked and went back. And the next LLC video he made, he updated it. It was actually correct the second time around, which I thought was kind of cool. Someone must have given him some feedback and said, hey, this isn't technically true. He didn't get rid of the old video, but it was like the same video, slightly updated. So I thought that was kind of cool. But you must get a lot of hate as well on social media. Like you
Uh,
must get not really.
Not really. I mean, there's the occasional trolls and stuff like that will
Interesting.
come in and just it's just F
Yeah.
the IRS or Fed boy and stuff like that. But that's only, I would say, only on my snarkiest videos that I would get anything like that. Not really. In terms of like response videos, no one.
That's interesting. I would have thought, because you see people putting content out all the time, like you don't have an abundance mindset, or like, like stuff like that, where I would have thought you'd get comments from those like entrepreneurs that want to cut every corner and try and pay $0 in taxes. I would have thought for sure you'd get comments and hate kind of being like, you don't know what you're talking about. Like, you shouldn't be paying any taxes, da 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 da. I'm surprised.
Rare. 5 to 10% of the comments will ever be like that. It's mostly on the most viral ones
Interesting.
that you'll get those people. I do my best. I do my best to hedge everything I say with a little bit of wiggle room so that I can be correct, or it's based on a particular circumstance where it's like, I'm not wrong. You just get brought in a totally different scenario. So it doesn't matter. And maybe they see it that way, but also I don't know. People don't usually, I'm not going to say that people don't, because people do, but it's not a large influx. But also, no one ever makes any videos. I've never had. I really want someone to respond to my videos so that I can then tell
Oh, with
them
like a
where they.
video. Yeah.
Yeah, no one will do that. And I respond to people's videos now. I respond in the comments. I make sure they know that I'm responding to them, and I'm not trying to hide it. I'm trying to be mean, but they don't ever give me a response back. And I'm like, well, man, maybe they learned something. Maybe they accepted it.
Yeah, because you're kind of known for doing that now, right? Like people tag you in tax posts and you kind of give your
hmm
response on, whether it's true, whether it's not, uh,
Yep.
depending on how bad it is. Yeah.
Yeah, and I
That's
respond. I
interesting. I
respond
actually
to the.
think that's really go ahead.
Oh, go for it.
I was just gonna say, I think that's actually really helpful for anyone listening who might be a CPA or any professional who is scared to make videos because they're scared of the trolls or the mean comments. Like, I actually think that's really helpful. I mean, you've got 80,000 over on TikTok, 20,000 over on Instagram. I mean, you're calling people out essentially in in those response videos. I mean, you're basically telling them they're wrong a lot of times, and they are. So it's there's nothing wrong with that, and you're not even getting a lot of hate. So I actually think that's really good for people to know. Like, there's not a whole lot to be scared about. I think a lot of people don't post because they're scared of, the hate and the trolls and all that.
Here's what I would say. Like at the beginning, when I started stuff, I didn't have a lot of credibility, so people would be more apt to maybe have an argument in my comments. But one of the best things that you can do, especially on like TikTok, I don't know if Instagram has this, but at the beginning, if there's a comment that was going to keep me up at night, just like, I got to respond to this guy. He's wrong and I'm right. Just delete it. It's gone. I don't even know who that person is. I can never go find them. They're never gonna come back to my video. They don't know. They're just scrolling by and just being a troll. That's the best thing you can do for yourself. You'll sleep a lot better at night because now it's like, well, I don't even know where that person is anymore. That comment doesn't exist. It's in the ether at this point. That's the best thing you can do. Just keep moving forward because most of the people that watch your video, 90% of them are going to be like, that sounds good because they didn't know the answer anyways. And you researched it. That's the most important thing is research the thing you talk about beforehand. Make sure you are correct. And take I mean, there are a couple videos I've done where I was like, I think I was technically a little bit off on this, that I'd rather just go ahead and take it down. Someone did leave a comment where I was like, you know, I think this is a little bit off. So I actually did take it down. I was like, hey, thank you. It's good information. Took it down. Well, not that I was leading people the wrong way, but it was just like, this is the wrong topic for the thing that I was answering. So I'm going to go ahead and delete that. So I try to take comments into advisement, but at the beginning, people will try and maybe argue with you. Just make sure you put things out that are correct so you don't have anything to worry about. But also, if someone's just going to troll you, just delete their comment. Just don't even worry about them.
For
They don't
sure.
deserve the breath. So,
Absolutely. Let's pivot a little bit. So,
mhm.
what are some of the top tax like savings strategies for online business owners that
Mm.
will actually apply to many business owners?
Some of the things that people obviously you just don't want to miss. The top things that you're going to do for any online business, any at home businesses, your home office is going to be the first thing that you're looking at, or what are the things I'm using in my house that are for my business. That is the first thing. The ultimate thing I'd tell people is this: when you start a business, it's not that everything now becomes deductible, or now that there's just all these write ups, but it's not necessarily that you're also trying to create a loss against your other income. People seem to have this thought that like, okay, now I'm going to have all these losses. That's not the point of a business. Point of a business is to make money. But the nicest thing is there are a bunch of sunk costs that you have that now at least partially become pre-tax rather than all post-tax. Your rent or your mortgage interest and the insurance and your property tax, things like that, now we're all pretty much post-tax, right? Or I mean, they were itemized, but now I can reduce earned income with them, or my rent that I couldn't do anything with. I can at least take a portion of that. My cell phone bill, my internet bill, a portion of those things as well. You're paying that no matter what you do. You need to live somewhere, you need to call people, you need internet. Those things exist without you starting a business. And now because you have a business, especially at home, you can now take a deduction for them. So that's the first and foremost. That is the most important deduction most people are going to get. And I know a lot of people tell me in my comments all the time, well, the home office is a very highly audited item. Sure, the Schedule C itself is the most highly audited schedule on the tax return, and the home office is a schedule intended for the Schedule C. So absolutely, that's fine. But if you are just doing things correctly, there's nothing to worry about. They can audit you all you want. Just know what the square footage is of your home office. Use it for your home office. I've never had someone audited on it. Doesn't mean it doesn't happen, but I have 3,000 clients, and doesn't come up often enough for us to really not do it. So it's not necessarily something where it's
I think
like, don't ever do it.
I think COVID probably kind of eliminated that being a red flag, anyways. If I had to guess, I mean,
Could be.
there's the home office deduction that had to have exploded in the last 3 years.
It's true. Yeah, a lot of online businesses started. Especially, I saw a lot more. Heck, just like a lot more online fitness in general. But you're
Yeah,
right. Probably the influx of them, unless they see something major, like unless you're taking like 50% of your house or something like that, or more. That's the only time where you're really going to have an issue, and that's probably why people see it get audited is because they're doing it inappropriately. But that said, I mean, that's a good first step. And the second thing is, what equipment do you have? What are you using? Like a lot of people will start and it's like, I have my computer, I have my phone, I have these lights, I have this furniture and stuff like that. And you're not thinking about it. And it's like, well, I've already bought it. Okay, well, there's a fair market value as of today. You know, you can take like your not necessarily the what you would buy for now, but what it could be worth at this point in time. You can deduct that now. It's a contribution into the business. There are these assets. That is also something, this equipment, especially like computers and things like that, you're using these things. And especially things that people miss all the time is they buy a new computer. I guarantee you're not using your computer unless you're like a big gamer or something like that for anything other than work, because we now have TVs and phones and things like that that we use for all of our internet searching and for watching movies and all this kind of stuff. Our computers are strictly for work. So if you're buying a computer, it's 95% for business, and it's pretty easy to justify that being 100% business. So it's like that's an easy one people miss, which doesn't seem like they would, but they do all the time. I'm like, "Did you buy a new computer?" Like, "Oh, yeah." I did. Oh, I also brought this printer. Well, let's put it in there. I don't think you're I don't think you're doing arts and crafts on the side. Let's make sure we get that on the in the business here. So those are a couple things. It's furniture and equipment in that home office. Those are the biggest thing for online businesses. The car, like you said, most online businesses, they're not using their car for anything, but still track your miles when you have to go do something. Because now that you have this home office, when I travel anywhere from here for business, those are business miles, and 65.5 cents per business mile for 2023. Might as well, at least, like, if you're driving to the store to get equipment or supplies or to get things for client, I don't know. I mean, you go to the store to get supplies for your business all the time. Sure, I'm sure it happens a good bit. This is where your office is. That means when you're driving from here to the store and back, those are business miles. Keep track of those miles. You might as well get a little bit extra deduction for it, because you don't have to like have the vehicle as an asset on your business. It's not the same thing as depreciating it. It's just business miles. You're driving for business. So an easy one to forget is that one, especially with an online business. You're like, I don't drive for work. Well, just start putting down on your calendar when you do, and so you can have some kind of record of those miles that you drove.
Let's stop right there. That's one of the biggest things I think that business owners miss is
Mm,
recording things.
yes.
It's so important, because I feel like they're just like, oh, it's like, did you save a receipt? No. Okay, did you like write down what the business meeting was for? Let's use that example, or the business meal. Like, what were you guys talking about? No, but I'll remember it. And it's like, no, you have to write it down, have like a log. So if you get audited, it's all there. Because getting audited just means you have to justify yourself to the IRS. I mean, if the expense is legitimate, it's like you said earlier, I forget which one we were talking about. I think it was home office. If it's legitimate, who cares? Who cares if they
Right.
audit you? You know what I mean? So that's a really good point. Recording it is so important. Record notes on any like business meetings, business meals, save receipts for everything is huge. I get a lot of online business owners that don't do that, and they're just like, "Oh, I can find it later," and it's like, just save it now. It's so much easier
Mhm.
to just save it now, scan it, take a picture on your phone, and log
Yep.
it. Do you have so I know there's a bunch of like mileage trackers. Do you have like a recommended app or anything that you tell clients to use for car mileage?
Yeah, I mean, Mile IQ is the one that I've gotten the most reports from, and it does a great job. You can even kinda go back in time because it records your trips. No matter whether or not you've gotten into the app or not, it'll record that trip as having
Mhm.
happened. You can go back in later and say, "This was business, this was personal." So that's nice. So, like, even if you forgot for the week, you can go back through, see, and it tells you the addresses pretty, like, where you've been traveling. So it does a really good job. And you're right. It's a What the IRS wants is a contemporaneous record, a record as you go. They don't want you to be going back in time and trying to figure out what you did, right? A good record is not something that says, I did this for 2 hours on Thursday, July 27th. They want to see that from 12 to 2 p.m., I met with John Baker at this address or we had this meal. They want to see it. They want it. That's specific. It's a time. Use your calendar. Like, I use my calendar for everything. So if your calendar is used for everything, put it on your calendar. Whenever you're doing something, make
Mhm.
certain calendars. Here's my meals calendar. Here's my appointments calendar. Here's my picking up supplies calendar. So I can at least track all of these things. So I know what I did. So I have a time of day, I have a date, and then I have the purpose that I went there. That's your contemporaneous record. That's totally fine. You can do that. And then, like you said, I love your advice too. So I tell people all the time, you do not need a physical receipt. You need just a copy of your receipt. It's totally fine. So just take a picture on your phone, throw it in a Google Drive or something like that for the year. At least you have the receipt if ever audited. That's all you got to do. Like, you don't need to keep like a folder full of receipts, which are all going to fade away anyway. So you might as well take a picture of it.
Yeah,
So,
it's so true. I mean, gone are the days of just bringing in shoe boxes full of receipts to
yeah,
your account and just putting it on the table. I mean, aren't you glad that you weren't alive for those
yeah,
days?
yeah. No, I've had people do it. I've had people do it, and I was like, hmm, which
Really?
employee am I giving this work to? So,
Cool. I am curious on your thoughts. You brought up the Augusta rule earlier. How can that actually be applied for business owners? Like, what's a good scenario of that being realistic and reasonable? Or maybe
yeah.
there isn't one.
So, here's the thing. I do agree that it is a cool deduction, But like you're saying, like how realistic is this for everyone? Not as realistic as they make it seem. And the problem is there are so many tax advisory firms popping up that are just saying like, just do this. And we're just going to put in that you rent it out for 14 days and it's for this amount and boom, you just pay yourself this. Why? What did I do? Right? I need proof of it. And in the same way, I need to keep a receipt of stuff. Your business should be billing you for whatever it was that you did. Things that I could see being a legit reason, right? So let's say let's say me, right? I have two other partners. One is my dad. One is a man named Larry, an accountant for about 40 years or so. We live in different places. So if I were to say, we're going to have a partner meeting, one, I want to be away from all of our employees because I don't want them to be a part of the meeting because we're going to talk about them and things like that and the trajectory of the business. And so we're going to rent out my house. I'm going to look at meetings, the hourly rate for meeting spaces in my area, see what those are. We're going to have a 4-hour meeting block for that time. And okay, now it's going to be $100 an hour to rent out a pretty comparable space or whatever, right? With a kitchen and with a meeting room and all this kind of stuff.
Comparable, not a
Comparable.
luxurious resort.
Yes.
Comparable. Thank you.
Yes. Yes. And I've actually had people say that their accountant told them, no, 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 you gotta think outside the box. You gotta be looking at, like, what the mansions cost. I'm like, "Well, do you live in a mansion? Well, then why would you look at the mansion? It doesn't matter. You're not having the same amenities as a mansion would have." But yes, comparable for sure. So let's say it's four or $500 something like that for that day. Augusta rule pays me. I don't have to count the income because it's only one day, and the company gets a deduction, and I don't have to count the income. That's fantastic. Totally doable. It's partners coming here. There is a reason for it. I build a company for it. It pays me. What doesn't work is, again, you just saying carte blanche. I'm going to have 14 days during the year. I'm just going to transfer this money each month. Why? What for? What's the point of the meeting? Like, what did you do? Did you actually have the meeting? Did you document the things you did? Again, like you're saying, I need to have a company minute. The best thing you should do is put in an actual corporate minute of what you did. I had this meeting. We all agreed on these things. We made these changes or didn't make these changes. Boom, put in the corporate book. So now I actually have extra proof beyond just the bill that I gave, right? That meeting happened, that these things happened. Another thing that I could see. So that's me with partners. That's easy. Partnership meetings, easy. Other things would be obviously events for contractors, vendors, employees, things like that at my house, at my personal residence. Absolutely. Sure. You're renting out your space instead of going to either a hotel conference area, obviously be don't take your exact rate per that hotel maybe, but be comparable in the types of amenities you're providing. How does that compare to another hall space, stuff like that? That's an easy one as well. But let's say you're an individual and you're like, how can I use my house? Well, the first thing is, if you're someone who has a home office, I think this does raise the bar a little bit because now you really got to be kind of creative with what you're going to do for your Augusta rule use, right? Because your Augusta rule says I'm renting out my personal residence. Well, if I have a home office, my home office is commercial, right? It is used for the business 365 days of the year, right? So nothing pertaining to my home office could be a part of this Augusta rule because it is not my personal space anymore. It's my business space, right? So I can't use that. So the other, let's say 20% of my home is my home office. That means the other 80% needs to be used for the Augusta rule, right? So if I have use for the other 80% of my home, either that be events for bringing people in, stuff like that, okay, that sounds good. But it cannot be me bringing in clients to me to my home office. Why? I'm already deducting my home office. It already is an expense for me, and I'm using it more than 14 days of the year. It's not just picking and choosing 14 days during the year to take this deduction for. That's also, I think, what people get confused. They're like, well, I have a home office. I'll just pay for 14 days of it. Think about it in terms of if I were to go to my neighbor and say, hey, I'm going to pay you to use your room in your house for 14 days during there. I'm going to pay $1,000. I'm going to pay you $14,000. You don't have to count the income, but I'm going to get the expense. They'd be all for that. Like 14 days. Sure. You can go ahead and use that. But then I tell them, but I'm actually going to use it every day during the year. That's not, why would they agree to that? Why would they agree to you using it every day during the year, but only paying them for 14? That doesn't make any sense. So obviously it needs to be for something you use 14 days or less. Sorry, going off a little tangent. There's so many things to talk about on this one, but let's say you're
No,
someone
that
who
was good
has,
clarification though,
yeah, yeah.
because I had
So, I
actually
mean,
heard I had heard it a little bit more broadly of just like if you have the home office deduction, you can't do the Augusta rule. So you going like more specific, no, you just can't use the home office as part of it. That makes more sense to me.
yeah, because it's all about, because I still have personal use of my house, right? Because that's the other 80% of my house. So
Right.
it's me renting out that, right? It's me renting out that to the business. So I mean, again, like what could you find for that purpose? One of my clients had a pretty good one. She has a very nice house and she invites other like influencers and things like that to come to her house randomly throughout the year. And so what she chose to use as a comparable rate was what is studio space for like filming and photo shoots and things like that with a nice aesthetic. Like what are those rates per day and stuff like that for her to invite these people in. That's fantastic. That's a great idea, right? As long as she's not using the home office space that she might be deducting.
Right.
Perfect. That sounds great. That is a good use for it right there. Ultimately, if you ever have partners coming in or people coming in from out of town and they're staying overnight, okay, you have a really good reason for the Augusta rule because that's technically what it's intended for is for people staying overnight and things like that. So now I can look at hotel rates, and that's when I'm able to deduct because in lieu of me sending you to a hotel, I let you stay in my house. Fantastic. So again, there are a number of ways that you could use it, but I really think it revolves around having other people. It can't just be you doing random stuff in your house. It's a little bit tougher because you're always in your house. You're always using your house. It's better when there's other people involved that you're either bringing in or that are, you know, involved in your business to be able to utilize the Augusta rule. Because otherwise, I don't need to pay myself to be in my house. That's kind of weird.
No, that makes total sense. Real quick, we should probably define what the Augusta rule is, and then we're going to move on to a new topic. But I realized, I was like, man, we've gone pretty far in this, and we didn't really say what the Augusta rule is.
Yeah, yeah. I can't remember the section goes like to section 284 or something like that, or 280A.
No one cares about
Uh,
that, anyways, on here.
yeah, it's like IRC 280A. The Augusta rule is I can rent out my personal or secondary residence for 14 days or less during the year, and I don't have to count the income personally, right? So it has
For
nothing to do with
taxes.
business and yeah, for taxes. So basically, people in Georgia, Augusta, Georgia, rented out their homes around the golf course, and someone lobbied the IRS or someone lobbied Congress to say, "Hey, why are we counting all this income when it's only like a 2 week event? We only rent it out during this time. We leave during this time so they can be there near the golf. We just don't really care about the tournament." And they said, okay, sure. You don't have to count that income. If it's for 14 days or less during the year, you don't need to count the income. Now, you can't count any expenses related to the rental of your home, but you don't need to count the income. So basically, like they were making 14, 15 grand or 20 grand during those 14 days, free money to them, right? They don't have to count any of that income. Taken to its end, what people have said is, okay, well, I could use this in my business and my corporation could pay me for use, me personally, for the use of my personal residence or my secondary residence. And it gets a deduction at the company level, but I don't have to count the income personally. So that's the Augusta rule for businesses.
Cool. All right, let's one last topic I want to cover on taxes because I see this a lot and I'm curious, what is your advice? So the IRS, extremely outdated, has a $25 deduction limit on
Yeah.
client gifts. I see this one all the time because I work with coaches, I work with creators, consultants, and they send, birthday gifts, Christmas gifts, onboarding gifts, all sorts of gifts. And so I'm curious, what are some ways around actually deducting more than $25 on gifts?
Yeah, don't call it a gift for sure would be the first thing. It's really tough because the general advice is this: find a way to make it a marketing expense. Find a way to make it a piece of branded content, basically, rather than just a nice chocolate set or something like that. Make it a business expense because yeah, you're right. Gifts are subject to $25 limit per person per year. It's really dumb. And I usually ask people like, what was this really marketing? Like, what did we actually give these people here? Like realtors is a big one. Is I deal with a lot of realtors. I'm in the real estate space still, but big thing was brand that thing that you have with your marketing materials. Put your logo on it, put your cards on it. This is just included in the marketing aspect that you're doing here. You're giving people these things. Now the IRS still is a little iffy on that, but I think you have a much better case that like, hey, this is my marketing package and it just comes with a bunch of swag inside of it. Right. And that's what I'm just kind of giving out to people. I don't know who I'm giving it to. I'm just kind of just giving it to people that way. That's a better way to go about it. The tough part is once you start really getting into like I have very very wealthy clients that give Brookstone chairs to people. That's There's no amount of branding you can put on that thing. That is just a gift, and
Hmm.
there's pretty much nothing you can do unless you 1099 that person for the value of the gift that you gave them, which kind of defeats the purpose of the gift. You're kind of
It
stuck.
really
Kind
ruins
of
the
stuck. Pretty
gift.
much. Yeah, it's not a sweepstakes, and yeah, it's not the wisest thing to do for a gift. But it, I wish that there was a better answer. The IRS, you're right. I think that they should definitely increase those limits because nothing costs $25 anymore. I can't go to the store for $25. Like, what can I get? A water or two? I mean,
Yeah,
what
it's
is there?
crazy. I saw it hadn't been updated since, like, I think it was the 60s if I'm remembering correctly. It's been a really long time. It's probably not the 60s. I don't memorize tax code like you do, but it's been a really long time.
Yeah, it's it's unfortunate.
You
It's
know
it's
the
a
other one
dumb
I run
rule.
into?
Yeah,
Yeah, no,
yeah.
I
What's
was
that?
just gonna say the other one I run into that's kind of similar is like contest like giveaways, right? So like a lot of
Mhm.
coaches online, you probably see this, a lot of fitness coaches and stuff, they'll do these contests, right? So like, you'll get like 30 women to join and like whoever loses the most weight wins, $500, Lululemon gift card or something like that. Is that deductible?
Yes, but they would need to again winning sweepstakes, things like that. You technically are supposed to get a W-9 and send them a 1099. Now that said, if it's under $600 of a gift, you don't need a 1099 that person. What they choose to do with those winnings is totally their own. I don't really care if they choose to report that income or not. I'm under the threshold for sending a 1099, so I'm fine. So that would be different.
So
That
keep
would
it
not
under 600.
keep it under 600. I don't have to send you a 1099, but they should count it as income. What they choose to do with it is I'm not their accountant, like I'm not that person's accountant. I'm your accountant. So I don't really care. So yeah,
Exactly.
that's
The
the idea.
business
Especially
owner, yeah, sorry, I was saying the business owner, like their obligation is covered. They can let the client know,
Mhm.
like, hey, technically this is taxable income, but they don't even really have to do that. That's really up to them. They're not an
Yeah,
accountant. They probably don't care.
exactly. Exactly. And this happens a lot with like social media people too, getting stuff from companies,
Yeah, like free
when
like
they
free stuff just to kind of promote it.
exactly, when they get free stuff like that. And it's like, do I have to count that as income? And it's like, well, technically you do. But there are ways where you can mitigate this. It's one, do you give it away afterwards? Like, do you not actually use this thing? Then I wouldn't count it as income. Do you actually use it? If you're going to use it in your business after you actually get that gift, I would count that it's fair market value. Technically, these companies should be sending a 1099 for that income. It wouldn't be wrong for them to do so. None of them do, and the reason for that is typically because
Mhm.
these are just coming out of their just coming out of their inventory. They're not really keeping track of it in that same way. They're not counting it as a marketing expense. They're probably just counting it as cost of sales. Like, I mean, they're not really tracking it either. So they don't care what you do with it. So what I have some of my clients do is I'm just like, just keep track of all the things that you're getting. And if you receive a gift and you're going to use that in your business, you're keeping it, we'll count it as income, right? That is income to you. You have an asset in your business. If you're going to give it away, fantastic. If not, go ahead and sell it. Sell it so that way the value that you have in it is the price that you got when you sold it. So now you actually have cash that you're counting as income. So there you go. There's your actual income there. That's the best thing to do. So that way you're not just taking this phantom income for this product that you may or may not have wanted. So if you sell it for nothing, cool. Great. You don't have to count it as income because you lost all your money on it.
Cool, man. Those are some awesome tips for online business owners. Now that they're completely bored with taxes, I got a few non-tax questions for you. What's with the Disney obsession?
So my wife was really obsessed with Disney. So we got married. I had never been to Disney before. The first day of our honeymoon, we actually went to Disney and I didn't like Disney. I was like, I don't care for this. This is nothing. Then we went to Jamaica. And then later she was like, hey, I want to go back to Disney. And I was like, well, fine, because I kind of have to. We're married. So we went to Disney and it was okay. And then the third time we went, because I love my wife. So what she wanted to do, we did. Third time I was like, you know what? Kind of digging this place. Kind of digging it. It's I can respect it from a business standpoint. And then we got our annual passes and it was pretty much a foregone conclusion at that point. So then after that, we actually started, and here's a tax tip for you. I know inadvertent, but a tax tip for you. we actually started a Disney inspired apparel company. So if you actually look over at my Instagram profile, I have linked my other Disney related profiles.
I saw
We
that.
have a
Yeah, I saw that.
yeah, yeah. Those are most of the tank tops I wear are my are designs. But we started a Disney inspired
Oh,
apparel company,
cool.
which means not Disney characters, not trademarked characters, but inspired by the parks, inspired by movies. Tried to avoid using any actual characters and things like that. There's a whole community on Instagram for this. That's where it kind of all started. And I was like, hey, well, we have to go to Disney to get pictures and all these things. We go to Disney anyways. We have our annual passes. You have to keep on going down to be able to get good content, to make to make sure that we're getting good pictures down there, we're doing stories down there to create our following, to have engagement. So we actually were able to write off pretty much every trip we took to Disney because it was business related. I had to hire photographers, videographers. We had videos and stuff like that. We had other people film us and photograph us, and we went down sometimes 1 or 2 days just to get photos in our new apparel and things like that. But we got to go to Disney, so it really wasn't that bad. So we got to combine the things that we loved, business and Disney. So for me, it was a lot of a business play, and that I was able to deduct a lot of the things that we were doing. Not everything under advisement, right? But we did it legitimately, and was able to deduct a lot of stuff. After our second daughter was born, we just have not had the time. COVID hit, basically. That was the start of lockdown when she was born. It's hard enough to get down there, and then it's too expensive now. So to be quite honest, we don't go nearly as much as we used to. So it's kind of lost a little bit of its luster for me. But it was a fun time. It was a fun like three years there. So
Pretty genius. You found a way to make your wife happy, go hang out at Disney, and write it off in the business. I mean, I think that's a win-win-win. Before anyone listening to this says something, can you confirm that you were at least making a profit? So it was a legitimate business. It wasn't a hobby.
it was not a hobby. It was definitely not a hobby. Did I make money on it? I mean, we made revenue. Did I make money in excess of my expenses? No. Unfortunately, it never got off the ground. I spent a lot of money on that thing though. Like besides going to Disney, like a lot of marketing expenses. Again, I paid photographers, videographers. I paid a lot of people. I have a lot of inventory still sitting in my attic right now. I could easily prove the legitimacy of this business.
Your
And to
intent.
be honest, exactly, my intent was to make a profit. And I wasn't doing my taxes at this time. I was still just full time realtor, not a tax accountant at this point. My dad, a CPA
Gotcha.
of 30 plus years, was doing my taxes and legitimizing these things. So I have it on good authority that I was doing it correctly. And looking back, I did. There was definitely clear profit motive in what we were doing. We just never reached it, unfortunately. We put a lot into it though. We really did.
No, that makes sense. That was good clarification. It's the intent to make profit. You don't act,
Hmm.
sometimes you just don't make profit. It's unfortunate reality of starting businesses, but the intent to make profit. Because I do hear a lot of, scams where people, they start a business to write off all these expenses. You got to somehow show that you're trying to run a legitimate business. So I
Hmm.
digress. What's it like being a girl dad and running a business? That's a recent thing I am also doing.
Oh yeah.
Yeah,
I
we have
love
a
my
four
daughter.
month old.
You got a 4 month old. Oh, that's fun.
Yeah.
That is, yeah.
Okay, I'm looking for
Yeah, I
your
got
advice here.
I have a 6 year old and I have a 3.5 year old, two daughters, and man, they're just the happiest kids. They are truly just two of the happiest kids. I don't know where they get it from. Me and my wife are not unhappy people. We're just very even tone, kind of even keel kind of people. Just they're a bunch of flower childs. I love them. They Girls are kind of easy though. You have to understand, girls are easy for the first 10, 13 years. They're actually you're kicking the can down the road. So no worry. We
Yeah.
don't really have much to worry about until they get a little bit older. The ultimate thing is this: girls are really emotional. I'm not. So when they get to this point where I'm like, I don't understand how to help you. They don't want to be helped. They're a girl, that's how they are. They just will continue to be that way. I'm like, you need your mom because this is out of my field. I don't have the patience for I'm trying to solve your problem, but that's not what you're looking for here. Classic guy move, right? So your daughters will do that too.
And accountant.
Yeah, yeah, yeah. So that's why I go to
Honestly, that's
work
probably
most of the
really good
time.
advice for me. Yeah, no, that's probably really relevant for me. Finance guy, always trying to solve problems, numbers guys. So cool, man. I appreciate that. Thanks so much for coming on. Let everyone know where can they find you, learn more about working with you.
Yeah, so I mean, you can head on over to my Instagram. It's at Krop CPA, KROP, Krop the CPA, Krop KROP the CPA, and TikTok is Nick the CPA, so NICK the CPA. Someone already took that on Instagram. Same with YouTube. It's also Nick the CPA, where I'm going to be putting out a lot more long form content on there, and those will all have links back to my website, which is Cornerstone Accounting Solutions. It's a really weird URL. I bought this company, so unfortunately I married into this URL. It's CASACCT.com is our link. But again, if you go to my social profiles, you'll find a link tree with all of the links to all of those things. And the best way to get in touch with me is contact me through my website. I don't respond to DMs very well because I have 2 daughters and a wife, so I not usually looking through all my DMs in my spare time. But, send an inquiry that way. That's the best way to get there. But also, if you just ever want general good content, I always tell people follow me, not because I need the followers, but because that's where I can answer a lot of questions for people. You can ask me questions on there, and I like to be able to respond to them because one, it helps me hone in my understanding of the tax code because it makes me go back and actually research things. And I like to put out really good content and give good answers on things. And then YouTube, again, that's where I'm giving a lot more long form content to answer a lot of these questions and to talk about some of these videos that you see online that I couldn't really get in a 3-minute video on TikTok or a minute and a half on Instagram. So there you go.
Yeah, absolutely. And I would 100% agree. Go follow him because I started following his content. That's when I learned about you. And then I reached out, started sending clients your way. And it's been an awesome experience I haven't heard a bad review yet. So totally appreciate you coming on, man.
All right, man. Sounds good.